Hello, everybody. Having a conversation with somebody that was in a extra high income tax bracket this year. They had some extra income, and while they enjoyed the extra income, they were lamenting the tax bill that went along with it. Had some conversation about what their goals were, what things are important to them, and one of the things that came to light is that they are somebody that gives money to nonprofits on a very regular basis, and not a small amount of money. So one of the things that we talked about was the idea of what's called stacking, which is giving multiple years worth of gifts in 1 year. Now, the problem with that was they didn't want to give up the control for that. And so we talked about something called a donor advised fund. And that's the main thing that we're going to talk about today. So a donor advised fund has two big benefits. The first is that it allows you to make a large contribution in 1 year and then spread out the giving to the charities, to the nonprofits over the course of several years to different organizations in different amounts. So you get the deduction for everything you contribute to the donor advised fund the year that you make it, but it is an outside account and it allows you to control how much and how often you're going to give the money. So a big benefit. The second thing, and this also applied in this situation, was the idea that it allowed them to avoid some capital gains taxes. And what I mean by that is instead of writing a check and giving cash, they were going to donate a security, in this case, a mutual fund that they'd had for quite a few years and at a very low cost basis relative to the value. So the value in rough numbers was about $50,000. Their cost basis was only about $10,000, which means that if they had sold the mutual fund in order to fund the giving, they would have had a $40,000 capital gain, in this case, a long term one, but still would have owed some taxes on that. Instead, they gifted the mutual fund directly to the donor advised fund. They received a deduction for the value on the date that it was given. And then the donor advised fund owes the capital gains on the gift, on the bill price and their cost basis. But because it's a nonprofit, the donor advised funds rate is zero, which effectively means that the charity is able to receive a lot more money. So if this sounds like something that you might be interested in, primary questions being you are somebody that's charitably inclined and you're trying to figure out how do I give the most money by paying the least amount of taxes over the long term, a donor advised fund is something that's worth looking into. Always talk about ideas like this with your tax preparer before you implement them. And if you found this information helpful, please like and subscribe.